the selling has been stronger than at any time since 2017, but so too has very large purchases by people who understand what's happening. So the person looking to make a profit, which I think is not the reason to buy gold and silver, they're looking elsewhere. But the trend that I see is of the public looking elsewhere as the insiders are draining the exchanges. There is reason to be optimistic, but there is no way of getting to that other side without dealing with the mountains of debt. I think 2025 is going to be a volatile year. And when the president-elect says this next year could be 1929 style depression, thanks to what we've seen already by the Democrats, I think people need to, and then see 6 to 1 insider selling versus buying. I think we need to be cautiously optimistic into the new year.
In today's episode news recap, silver almost keeps pace with gold in 2024. Silver surged 24.4% in 2024, driven by industrial demand, supply deficits, and investment potential via ETFs like ISLN. So congrats to the savvy stackers on their silver holdings. As 2024 draws to a close, silver has emerged as a standout performer in the precious metals market. Although gold has performed slightly better so far, plus 27.8% year to date. Silver benefits from its dual role as both an industrial and investment asset. On the other side, silver has jumped 24.4% so far in 2024, nearly matching gold's performance as of December 27th. After rebounding from a 3-month low of $29 per ounce on December 19th, silver ended the week at $29.61. This rebound was driven by macroeconomic factors, rising industrial demand, and indirect support from aggressive central bank gold purchases. These drivers could support silver's continued upward momentum in 2025. Unlike gold, approximately 55% of silver's demand comes from industrial applications. In 2024, this demand surged, fueled by the growth in the electronics and renewable energy sectors, particularly photovoltaic, solar technologies. Solar energy alone now accounts for nearly 20% of industrial silver consumption, highlighting the global shift towards sustainable infrastructure. This heightened demand has led to physical tightness in the silver market, resulting in a supply deficit for the 4th consecutive year, according to the Silver Institute. Miners continue to face significant challenges in discovering new silver deposits, further exacerbating the structural supply deficit. This combination of robust industrial demand and constrained supply positions silver as a compelling candidate to outperform gold in the years ahead, especially as global interest in renewable energy continues to grow. Before we dive into more clips, make sure to smash that subscribe button and check our pinned comment for exclusive VPN offers. Protect your online privacy with NordVPN, the fastest and most reliable service out there. Just a few clicks secures your data and keeps unwanted eyes at bay. Plus, if you're a stacker seeking truly independent market insights, visit goldsilverstacks.com for our Stacker's Handbook, loaded with strategies to safeguard your financial future so you don't rely on commentators for market insights. Enjoy the episode.
In that December, just on COMEX alone, there was 25,642 gold contracts delivered, the second highest delivery volume in almost 3 years. And in silver, it was ridiculously high as well. And so what we're seeing is the insiders, the big money, the central banks, the sovereign wealth funds, they're standing for delivery as the retail investor has been, I think, mesmerized by the shiny objects over there, the Bitcoin and the Nvidia and the Apple and all of these stocks and cryptocurrencies that are posting returns. And I remember Richard Russell saying, if you make 7% a year, you're a rock star. And now gold making 30%, as you mentioned, in a year doesn't excite anybody. And that's very dangerous. But I guess at the same time, what I'm really getting at is you're right. The selling has been stronger than at any time since 2017, but so too has very large purchases by people who understand what's happening. So the person looking to make a profit, which I think is not the reason to buy gold and silver, they're looking elsewhere. The people who are looking to preserve and understand economics, understand that the math, as Bill always says, is moving into an area that is not sustainable. Well, they're contributing larger amounts of money into gold and silver, maybe even first-time clients. But the trend that I see is of the public looking elsewhere as the insiders are draining the exchanges. And that's classic misdirection, and that should portray for higher prices down the road, if I had to guess. I know a lot of the rhetoric surrounding the BRICS nations has somewhat died down. I expect to see a reemergence of this discussion in 2025. Trump saying he'll enact 100% tariffs on the BRICS nations for continuing their desire to move away from the dollar. That's not a tariff. Tariff protects manufacturing, domestic manufacturing. That is a sanction masquerading as a tariff. That is financial warfare. That is not something that I think will dissuade the BRICS from continuing to move forward. I think that from a domestic standpoint, I think the debt issue is something that has to be front and center. I mean, even Trump just sent out a tweet the other night saying, thanks to what the Democrats have done, 2025 could be a 1929 style depression. You look at the latest Treasury data that was just released for November, which was the second month of fiscal 2025. The U.S. spent $584 billion for October and November. That's the first 2 months of 2025 for the fiscal calendar year that Trump is inheriting are officially the worst start to a year ever for the Treasury. When I look at gold acquisitions, again, China doesn't buy gold for no reason. And they've bought 1,000 tons since the start. That's what they tell us, since the start of the Ukrainian war. At the same time, they've sold $250 billion of our U.S. treasuries. This is a trend that will continue. This de-dollarization will continue. I think they'll continue to accumulate gold rather than try to devalue their yuan against the dollar. They'll let it happen organically by accumulating gold. I think that's something certainly to focus on. Of course, it's the bond market. At the same time, I think the bond market, or with the Fed creating trillions to fund these deficits, that not only that they're inheriting, but the debt that is coming due. I think the bond market's getting very nervous that they see inflation coming back, that the ballooning U.S. debt is something that has to be dealt with, and how many treasury securities will have to be created to do so. At the same time, many of the countries that traditionally supported our debt are moving in the other direction. So I think that's something that we'll have to continue to watch very, very closely.
In today's news recap, silver price surge expected in 2025 as UBS predicts $38 target amid industrial strength. UBS anticipates silver prices climbing to $36 to $38 per ounce by 2025, driven by falling U.S. yields, robust industrial recovery, and stronger demand. Despite recent headwinds, the metal's dual role as precious and industrial could fuel its growth. According to investing.com, silver prices are expected to increase in 2025, according to UBS, which is boosted by lower real rates in the United States and higher global industrial production. This is despite the fact that the metal is struggling to match the increases spurred by the central bank in gold. Silver prices increased by more than 20% in 2024, but they have recently lost impetus as a result of increasing yields in the United States, a strong dollar, and growth concerns in global markets. With speculative short positions expanding and ETF holdings stabilizing following major outflows earlier this year, the metal is trading near its 200-day moving average. This represents a positive development for the market. In spite of these difficulties, UBS continues to retain its positive stance with a target price range of $36 to $38 per ounce for the year 2025. Although rising yields have been a disadvantage, a decrease in yields might potentially improve the desirability of silver. There is a need for a shift towards cyclical commodities, which UBS anticipates will become more prevalent as the year 2025 progresses. Dual roles of silver highlight its market potential. Despite the fact that silver's association with gold continues to be high, the fact that it also moves in tandem with industrial metals highlights the fact that it serves a dual purpose as both a precious metal and an industrial metal. Now we'll show you the best clips of the latest interview where Holter talks about his price predictions, but first, smash that subscribe button and check our pinned comment for some massive offers on NordVPN. If you're a serious stacker, this is a perfect fit for you. For less than the cost of a Financial Times paper, you can protect your online activity from prying eyes with the most reliable VPN on the market. Trust me, the only thing you'll regret is not getting it 6 months ago. Enjoy the episode.
If I had to guess, I would say also we're not out of the woods yet regarding the banks. And I'll keep coming back to what happened in Lindsay, Oklahoma as a trial balloon. They didn't say a word about it on the media. I mean, it was literally just kind of stuffed under the rug. And yet it's the first bail-in in this country with over $1 trillion in commercial real estate loans coming due in 2025. With interest rates moving higher on the back end. And it's not the federal funds rate that matters. The economy runs on the 10-year treasury. I mean, the mortgages and the credit cards and the leases and all of these things, they're all about the long end of the bond market, which is moving in the other direction. What havoc is that going to wreak on the banking industry? What havoc is that going to wreak in the commercial real estate? And I keep coming back to this thought. This thought of restructuring. I mean, Trump is the bankruptcy king. I mean, is this something that's baked into the cake? Do they know that we're going to have to reset some way? And is he here for that reason? You know, I've done interviews with people like Simon Hunt, who will tell you that he was selected, not elected, and he was selected to usher in this digital surveillance state. He talked months ago with me about they're going to issue a digital ID under the guise of election integrity. What do you know? He just said that. A lot of the things that I guess I'll just simply say this. And someone said it to me very apropos. He said, you know, is Trump the Trojan horse or is he riding on the Trojan horse? And that, I don't know. And I guess I would just simply say this after what we've been through for the last 4 years. If you don't look at everything cross-eyed, if you don't think outside the box, everything that's presented to us, I think you've missed everything that we lived through for the last 4 years. So as happy as I am that he's here, you have to wonder, what does it ultimately mean? I mean, what better guy to have oversee a bankruptcy or a restructuring or a reset than someone who's known for doing that professionally, maybe better than anyone. So I think there are a lot of things to keep your eye on. Most of them center around debt. And the BRICS have not lost sight of that. So don't underestimate the BRICS. Don't lose sight of the debt. Be optimistic, but understand that they're just like in the Shawshank Redemption, as I said with you before, Dunnigan, you have 2 miles worth of crap to crawl through to get to the other end. And maybe there is reason to be optimistic, but there is no way of getting to that other side without dealing with the mountains of debt and that tunnel full of crap that we have to crawl through. So I think 2025 is going to be a volatile year. And when the president-elect says this next year could be 1929 style depression, thanks to what we've seen already by the Democrats, I think people need to, and then see 6 to 1 insider selling versus buying. I think we need to be cautiously optimistic into the new year.
What are your thoughts on Andy Schectman's interview? Do you agree with his predictions? Do you think the BRICS nations could challenge the U.S. dollar and disrupt the American economy? Could gold really blow up in 2025? Drop your honest opinions in the comments and let the stacker community know if you're investing in miners or prefer sticking with physical metals. Thanks for watching. Don't forget to check out this video over here. I'm sure you'll enjoy it. I'll see you on the other side.